The top story we're tracking at this hour comes by the way of Paytm, and the clarification that has come in from RBI suggesting that RBI is unrelenting as far as the February 29th deadline for Paytm Payments Bank is concerned, post which it will not be able to onboard new customers. That deadline sticks, also hinting at the fact that an action was taken due to persistent non-compliance by Paytm, and it is in fact a decision that RBI has taken over the course of 2 years of negotiations with the Paytm Payments and Paytm's board members for that matter. So despite Paytm playing hardball, it doesn't look like RBI is going to roll back that important order, which will spell doom for Paytm Payments Bank as well as Paytm's business opportunities in days and months to come. Kartik, Malhotra, Krishnakumar is joining me here in the studio. Also with us is Sridharan, policy researcher, corporate advisor. Shri, I want to come to you first. Good afternoon. Thank you for taking time out. You know, it appears that RBI, in a very clear and direct message today, including the RBI governor, said that we are very keenly looking to work with digital payments companies, and he was giving an overall view of what he thinks of what Paytm saga has become, that if you do not comply and if digital payments companies, including Paytm, do not comply with what is the law of the land and know your customer policies, then you will go away and we will take strong, strict action. So therefore, stating that we are unrelenting, we are not ready to negotiate on that crucial order.
Hi, Shweta. I mean, I think your point about unrelenting is a very fair word for RBI. RBI has been very, very patient, and as we heard today in the press conference, RBI mentioning that they've repeatedly been waiting for compliance, and it has been almost perennial non-compliance. Whether you're a fin company or a tech company or a fintech company, if you want to operate in the finance space, you need to be compliant. That's a common basis for what the market stability and consumer protection is all about. So for the tech companies, however big you are, to come and flash your innovation card and say the regulator is unfair on me, I think it's probably an unparliamentary word, just being stupid. I think trust is something that if you can't earn with your stakeholders, don't be in this business at all. And unfortunately, this is going to hurt the sentiments around even those compliant fintechs. That's a sad part of this entire saga. It is not over, and I think it looks like, Paytm is going to be the example for everything that's fintech, and the suspicion that all fintechs are out to break rules and regulations, which is not true.
All right. You know, Kartik, we heard what RBI governor said. Krishna, Kartik, we heard what RBI governor said. He said that this was due to persistent non-compliance. He also added that our duty is to protect the customers at large, the end consumers, and hence an action of this nature, albeit tough as many people are viewing it at the moment, was necessary.
I mean, sure, you know, honestly, there's nothing new that came out of that press conference, though the press conference was never meant to be on Paytm. But I think all the questions that were asked of the RBI governor, of all the deputy governors sitting on the panel, you know, all questions actually got evaded. So it's not that the RBI governor or any of the deputy governors really said something that we did not know or hint in any direction that, you know, our minds were already not racing towards. I think what is important right now is something that all the panel members in the MPC press conference today said, that wait for the FAQ. So next week is when that FAQ from the RBI is going to be circulated, it's going to be released. Now, what, I mean, FAQs is understandable as generic sort of, you know, do's and don'ts and frequently asked questions. But specific to the Paytm issue, I doubt even the FAQ is going to answer much.
You know, but you know, to the question of whether there are other related banks who can take on the customers of Paytm Payments Bank, one of the deputy governors insisted that it will be a part of the FAQ.
No, but I think it was very clearly said that that is a function of negotiations, bilateral negotiations between Paytm Payments Bank and the other partner bank that they want to actually, you know, get on board to take on their now beleaguered sort of, you know, troubled business of Paytm Payments Bank. So I think we'll have to really wait for this story to unfold, because is the FAQ going to answer anything? We'll get to know next week. Are other banks going to want to partner with the Paytm Payments Bank and really take on that business, knowing that there are compliance issues? Will they want to take on those non-compliance vendors, accounts, customers on board and deal with it. And hence, I don't think the RBI is really going to intervene directly or indirectly with this bilateral engagement between Paytm Payments Bank and any other bank. And it'll have to be between those two entities.
All right, but as far as whether there is some sort of issue with partnering with Paytm at the moment, and if RBI has prohibited some of banks to partner with RBI is suggesting wait for that FAQ. It will be released perhaps next week. Krishna, one of the pointed questions that RBI members as well as deputy governors and the governor was facing constantly by a barrage of media people who were there in that press conference this afternoon was why did RBI not intervene timely after months and months of negotiation, in fact years of sending reminders to comply with those KYC norms? Why did RBI not send someone in the board to represent RBI and get it done? To which one of the deputy governors said that is one of the tools we can use. We haven't used it just as yet, perhaps hinting at the fact that they may use it later. But it looks like very few options available with Paytm at the moment.
Oh, definitely, because the other point that was made clear by the RBI, like with the barrage of questions from all the media people over there, was that don't be shocked by that announcement that came from the RBI about Paytm, because they've been working with Paytm, wanting to make sure that the compliance levels are met by Paytm, and that several reminders and signals have been given over weeks and months, and in this case years, before that final notice was given to Paytm. And as you're rightly pointing out, very little options left with Paytm at this particular stage. And again, from those words, we can interpret the fact that maybe there'll be somebody sent from RBI's board to intervene eventually to represent the RBI at Paytm, and then figure out in person as well. At this point in time, Paytm has very little options. Mr. Vijay Shekhar Sharma has very little options in his hand. It'll be interesting to see how what those FAQs will entail, what will be the content of those FAQs that the RBI is going to put out. And if you look at it, we've been reading reports about how Vijay Shekhar Sharma did meet people from the finance ministry as well, and the finance ministry also made it clear that there is no government action or government-induced action from RBI in this case. It's all about RBI and its own sets of checks and balances, which has not been met by Paytm, that has led to this particular situation. So really, there's no way to turn to as far as Vijay Shekhar Sharma and Paytm is concerned.
And we discussed, Kartik, some of those scenarios that could likely play out from here. But I want to come to you, Srinath. At this point, what options do you think Vijay Shekhar Sharma can exercise? He's met with the finance minister. We know that some of the members and senior members from the management have also met with RBI. RBI doesn't seem to be letting it go just as yet. Some would look at it as a very harsh action for not complying with KYC norms, which can be very basic. Perhaps they should have given a window of opportunity further to 29th of February. Perhaps this order may just be rolled back, but it is definite at this point in time that this order will stay and RBI is not looking to renegotiate with the Paytm. What options do Paytm have at the moment?
Yeah, Shweta, I think we are missing one point. It is not the first time RBI has issued an order on Paytm. October 2023, it levied a penalty of over 5 crore rupees, one of the largest in the Indian banking space. That really showed that they were really probably upset or pissed off with all the compliance lapses. I think 2021 also they had supervisory issue. 2020 also they've had issues. So it's been for 4 years that I've been having issues and raising this. And what they have taken action using Section 35A. The last time they used this was to actually take over a bank, the BMC Bank. So it shows the gravity of situation that RBI is seeing. And just to speak about KYC lapses, it is not a minor lapse. Of course, I'm not commenting on the allegation that are floating that nearly 90% of the wallets accounts seem to be suspect, or there have been KYCs where the same PAN has got some 1,000 accounts or 10,000 accounts. They are fundamental lapses which could lead to one of the issue would be money laundering, or is it being used for illicit activities. So a KYC is not taken lightly in the financial space. And Section 35A kind of seems to indicate there's much more than what RBI is saying. So just to bring the point about the FAQs, I think it will be very operational in nature. Knowing RBI, we are not going to know its mind until February 29th is over of what it wants to do with the bank. Today, I think my read is this: the trust is gone, which means the founder, the chairman, the CEO or the KMPs have to go. It's as simple as that. If at all, the company has to be saved. One of the questions I have for everybody is, this is about the payments bank. and Vijay Shekhar Sharma is not the CEO of that bank. Where is the CEO of the bank in all these conversations? Knowing a little bit about how RBI or the financial regulators operate, it is the MD of the institution along with the KMP, which is the CFO, the CRO, the CCO, all of them who have conversation with the regulators.
Right.
Here, that doesn't seem to be happening. So, which means that using the larger I'm using the word very loosely, the political narrative saying, I'm the poster boy for fintech, and which means that you must come and listen to me, is a flawed one.
Okay.
Let your MD go and talk to RBI, which they would have done. Knowing RBI, they always give time, process, lead time. It is not as if RBI has come and said, I'm going to shut you down tomorrow. And this reminds me of an anecdote, right? The let's say the most naughtiest of student goes to the principal and principal calls him up. And the owner of the school says, "Mera beta hai, yaar, relative hai, chhod do usko." And at some point in time, even the principal would say, I've given you leeway, but it is over. Right. And I think in this case, I think it's the same thing. You can't go to the minister for a supervisory lapse.
Right.
I think I'm so glad.
Very interesting analogy, Srinath. Very interesting analogy. We'll come back to it. In fact, it's also important to discuss what happens to the future of Paytm's UPI business and whether Paytm will can sustain without the payments bank, and if at all the payments bank license will be recalled, revoked, which is likely to be the next case scenario in the next few weeks to come. What happens to Paytm's other business, which is the UPI business, which could primarily be its revenue driver if and when the February 29th order kicks in? Is there enough merit in a UPI business or a wallet business to sustain without the payments business for Paytm at the moment? Is that business even viable, come to think of it? Because Paytm's business and payments business perhaps is where Paytm has made most of its money, will continue to make most of its money. It would just be another Me Too platform if the payments license were to be cancelled, and that of course looks like a likely scenario in a few weeks from now.
The short-term implication, Shweta, is going to be trust. The short term, if they lose this payments bank, they have to work with other banks to ensure that continuity of services to their existing customers and others. And I would be very keen to watch which of the banks in India would want to work with Paytm, considering a stance that RBI has taken that even basic KYC issues have been a problem with it. Two, I think if they don't have that license, one, they are going to be just another fintech. Forget the name, forget the legacy, forget all the old valuations. You're going to be just another shell fintech without any license to operate.
Okay.
And the third one, which is very, very important considering the future of this company, if they want to do anything around financial services, you have to still go back to the same set of regulators, RBI, SEBI, and IRDA. They had plans to get into insurance company, insurance, and so on and so forth. I think that's going to be a challenge considering governance issues that RBI has used, Section 35A. And I think that is where the larger point that I made, as if they have to save this company, they will have to ensure that the KMPs and the governance, they get it right, which means the founder has to step down from some of these rules. And it is not going to cut ties with the regulators that he continues in those, at least the two KMP as well as the governance rules.
All right. And what happens to the 40 million plus merchants and vendors who are currently on the Paytm platform? Some of those vendors have to shift base from Paytm Payments Bank to other partnering alternative banks. Now, other banks, if they don't come to the rescue and if they are at this point perhaps wary of tying up with Paytm or being close to Paytm in any capacity whatsoever, what happens to those customers and those merchants?
So, Shweta, honestly, I don't think they have a choice, because if they are unable to receive money into an account which they have, and that account being the Paytm Payments Bank account, they will have to switch over. So either using the same Paytm enabled ecosystem of QR codes and sound boxes, existing ones or revised ones, depending on how that back-end deal between Paytm Payments Bank and the other bank goes, if at all there is another bank in the first place. But even in the absence of that deal in the back-end going through, the customers will, the merchants will have to find an alternative bank account. Okay. Now, unfortunately, or fortunately rather for Paytm and for Vijay Shekhar Sharma, just about 20% of those merchants that use the QR codes provided by Paytm actually have a Paytm Payments Bank link to it. Because using the same QR codes, you can actually link your receiver account to any other account as well, which is UPI enabled, right? But the point is for those 20% of the merchants also, which is again a fairly large volume, because you're talking about 4 crore merchants by some estimates, you're looking at a big chunk of that, almost 80 lakh of those still need to be converted out of the Paytm Payments Bank ecosystem. Who's going to do it for them? So is Paytm going to reinvest in the same set of merchants which it has onboarded and serviced for so many months or years, and do that back end for the business to go to another bank? Or leave it to the discretion of the merchants, because the merchants are in any case going to have to migrate. So if you leave it to the migration of, to the discretion of the merchants to migrate to any other bank account, then what good is that Paytm QR code?
Absolutely.
Because you can link any other QR code, a bank generated QR code, or any other fintech QR code, digital payments QR code, to have those monies going into that receiver account. So who's going to get them to switch is a bigger problem. Second, like Srinath also mentioned, and this is something that you've also been mentioning for a while, is the whole trust issue. So if I already have a universal bank account, which is not a Paytm Payments Bank account, or even if I have one and I've ported out of that to another one, I don't need those 3, 4, 5 different QR codes. And the first one I'm going to pick up and junk out, throw in the dustbin, is going to be the Paytm enabled one, because you don't want the confusion to now rest at the users end, customers end, that hey, what if I scan the Paytm branded QR code instead of the other one? Am I going to lose my money as well? So I think they're going to get rid of, and like we've been discussing, if Paytm doesn't move fast and doesn't come to one way or another some decision on how it wants to retain those merchants and the customers, and how it wants to give them some additional services, either a revision of services or addition of services, then these merchants are going to migrate in any case. So the point is, what does Paytm have in its own arsenal right now to hold on to those customers, to retain those customers? What is that one promise? The soundbox was a great promise,
Absolutely.
right? And the soundbox also was not given free. There was money involved in merchants actually opting for the soundbox. But what is the value addition that Paytm is going to give to them today, which other fintech players are not going to give them?
Let's take that question from Srinath. Srinath, what is the value addition that Paytm has to offer to its customers today? If I'm a merchant, why should I choose Paytm at the moment? And if I'm not to choose Paytm, then are we hinting at Paytm perhaps being wiped out come 29th of February?
So that's a possibility, being wiped out. For the fact is, there is nothing unique or innovative that is stopping other payment banks or other wallets by offering that to the merchants. And my belief in the regulatory system is that RBI would not have taken this call before they had a plan B, which means including an operational plan. If they're going to, let's say, for example, shut and not renew the license for the payments bank, how would they actually port all of them? And they've done this, mind you, in the past with even banks and with branches and physical outlets. And this is only digital. Nothing stops him from actually saying that as of a next date, this will be taken over by another payments bank or another bank which has payment license. And these are all options available for RBI and the players available with equal set of digital capabilities. So I'm not worried about this. And I don't think RBI's mandate, I mean, just for a clarity, unlike the previous bank crises that RBI has intervened, where it involved lots of thousands of crores of amount, here amount is not at stake. Here it is actually the number of customers, and especially in the lower socio-economic segment, which is going to be of concern for RBI. So they would have done plan B and operational plan to the T. And I think that is what we are going to see reflected in the FAQs next.
Right, that FAQ, of course, will be very important, was promised by RBI today after the MPC meet in its press briefing. But, you know, if we are to sum this up, Krishna, digital payments ecosystem works on trust.
Yep.
And that trust, the foundation of that trust, has been jolted, and jolted rather badly with Paytm.
Oh, you summed it up better than I could, Shweta. Actually, that's the summation of it all. That trust in the digital payment ecosystem with a brand like Paytm, and there was nothing, there was Paytm. So which means it's something that's been trusted by Indians for so many years, so longer than every other payment platform. When that platform was jolted, then this will raise serious doubts in the minds of, there's so many already who don't want to link their salary accounts to their UPI. You know, there's already, you know, there's a sense of distrust when it comes to electronic payments, how quickly, how easily you can be scammed out of it, how easily you can be fooled out of your money, your hard-earned money. So when Paytm goes through something like this, it will jolt the fundamental trust in digital payments. You couldn't have said it better. But then again, we have multiple options today. It's all a question of what are the competitors going to do? How are they going to sort of swoop in and take up the place which they're already doing, and take up the place that will be eventually left alone by Paytm.
Shweta, before you wind up, you know, I know we are running short of time. I have one question for Srinath, and you know, that is something that I picked up, Srinath, you know, not at the press briefing, but in the original MPC announcement made by Shaktikanta Das today, and that is about a review for electronic trading platforms. So, to your understanding, to your mind, and if you are also reading between the lines like I am, perhaps I should not, is that after this fintech drama and after all the banking drama that we've seen, are electronic trading platforms going to be next on the RBI's to-do list to tighten the screws on?
No, I wouldn't call it the tighten the screws, right? But it is also to say that wherever there are large number of consumers coming in, gathering, I think there needs to be a prudential check. I think, let's face that, as I said earlier, it's not about money. It's about trust, consumer trust. And I think the sooner they do it, the better. And which is what I want to close off with the last point, that for all the conversations about RBI stifling innovation, it's not true. This is one of the regulator which is piggybacked on sandbox and various of the digital innovation. UPI 2015, if RBI did not push it, India probably would have struggled through COVID. I mean, I think that's the reality.
Absolutely.
And for a company which became almost an adjective to describe payments, today it has become a 4-letter verb, unfortunately.
All right, I think we'll leave it at that. Thank you very much, Srinath, for taking time out. But before we move on, let's also quickly listen in to RBI Governor Shaktikanta Das. He was answering reporters' questions today on what is the future of digital payments ecosystem in India. He summed it up by saying that there is vigilance and we will be taking an action on the basis of quantum of inappropriate, perhaps behavior or non-compliance of policies shown by any player for that matter. So player agnostic, we are keeping a close watch on the digital payments ecosystem. Listen in to that conversation.
This Paytm issue, because I mean, there have been at least 4 or 5 questions till now, and there could be many more questions. So let me put the entire thing, you know, let me put the record straight. Now, you said that worry about the system and all that. There is no worry about the system at the moment. Here we are talking about a specific institution, a specific payment bank. As the Deputy Governor Deputy Governor Swaminathan has already explained, he has provided several details. Similarly, I also don't want to comment on a specific case. But in this context, I would like to make some general observations, not with specific reference to Paytm as such, but some general observations which includes all our regulated entities. So all our regulated entities does not exclude Paytm. It is applicable to all the regulated entities. So let me focus on make some general points, and I would like to, you know, make some about 6 or 7 points. Now, first is that over the last few years, as all of you are aware, we have significantly developed our advisory systems, approach and methods. Number 2, our emphasis is always on, as the Deputy Governor has pointed out, our emphasis is always on bilateral engagement with the regulated entity. And in that engagement, we give focus on, and we are completely focused on nudging the regulated entity to take corrective action. Let me rephrase it. For you to make note, our emphasis is always on bilateral engagement with the regulated entities with focus on nudging them for corrective action, and sufficient time is given for undertaking such corrective action. The third point, when such constructive engagement which we undertake, when that does not work, so when such constructive engagement does not work, or when the regulated entity does not take effective action, we go for imposing supervisory or business restrictions. Number 4, such restrictions which we impose are always proportionate to the gravity of the situation. Please take note that such restrictions are proportionate to the gravity of the situation. Number 5, all our actions, being a responsible regulator, being a responsible supervisor, all our actions are in the best interest of systemic stability and protection of depositors or customers' interest. These aspects cannot be compromised. Individual entities should be mindful of these aspects for their long-term success. Number 6, over the last few days, we have received a lot of queries, clarifications from various quarters, including, members of the public. You have raised a few questions today. So we have noted all these questions and clarifications which have been sought from us. And based on that, we will be issuing a FAQ sometime next week. So that should address all these questions and clarifications which are being raised by you and which have been raised in the public domain and raised bilaterally with us by various from various quarters. Number 7, finally and emphatically, let me stress and let me emphatically state that the Reserve Bank is and will continue to encourage and support innovation and technology in the financial sector. Let there not be any doubt about Reserve Bank's commitment to promote fintechs, to promote innovation, to promote technology in the financial system.